Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host who likes to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So, well, we certainly had a little bit of a surprise. 80% of Fridays are higher than the Wednesday before that week on expiration. This is going to be the one out of two a year that is not on average. Down 39 points on the S&P cash, down 261 on the Dow. Nasdaq's down 187. Russell's off 16. Crude is down about 33. Did have numbers in the 1 o'clock hour on the Baker Hughes rig count for North America, Canada, and U.S. Slightly bullish, but not a whole lot, but slightly bullish. Of course, a lot of going on lately has been about the dollar. We're down about 58 cents on the dollar in the day, which is fairly nice. I mean, we got fairly close. My guess is that everybody thought the thing to do was short the living daylights out of the dollar once we got up there, and they certainly went after it today like that. So you got that. It's kind of bottoming off here over the last 2.5, 3 hours. But that's kind of it. You had a very interesting news. You've got a couple of stocks that for the first time are showing some weakness. And we'll see what happens by the end of the day. We'll go through those stocks. In fact, we got a ton of stocks to go through. So why don't we just get started with a little bit of history? Am I a surprise? Yeah, because 80% of the time you won't get it on the Friday. But doesn't mean that the other 2 times out of 10 that you won't get them. It is just rare.
That it's all just a little bit of history repeating.
On this day in 1965, in New York City, Malcolm X, an African-American nationalist and religious leader, is assassinated by rival black Muslims while addressing his organization of the Pro-American Unity at the Audubon Ballroom in Washington Heights. And, of course, almost everybody believes that it was Louis Farrakhan who gave the order, which they were all fighting over the remnants of a leader that was before both of them. If you watch the movie, it kind of comes close to what actually happened, but not as much as you would think. A lot of liberties in movies like that. But, well, you know what? Everybody warned him that Farrakhan, as everybody says, allegedly, was going to have him rubbed out. Of course, Farrakhan's still running around hating on the Jews as much as he can. But what can you say about that? On this day in 1965. Okay. I have a lot of stocks to go through today, so let's go ahead and get to the earnings, and we'll go through them as fast as we can. I did want to do one thing before we got to that, and that is the questions. Is that right? The questions I had. Oh, okay, I've got 2 of them up. I just didn't know. The probably the most interesting thing to me, and I've been highlighting in the newsletter for a while, is that the summation index never really went up with the rest of the market. I have no real long equity positions, or short anyway. I did buy some 10-cent calls in case we had a blowout in one of the stocks I was looking at. I'm going to lose my 10 cents. But other than that, here's what I'm looking at, and that is that you had the requisite pull down in the summation index, and the summation index is basically a oscillator of 19 and 38 days of the advanced decline line in the New York Stock Exchange or in the Nasdaq itself. But it's just gone sideways, and it's gone sideways since we had the lows. It never actually started improving whatsoever. I mean, it did kind of come off the bottom, but on the longer term scale, and if you're looking medium term to long term in the stock market, that's what you're really looking at. If you're someone like a fund guy, you're not looking at stuff like 9-day moving averages and that. You're looking at the long-term trend in the market. And the McClellan oscillator is kind of the medium to long-term version of that. When I was talking to Tim Ward, was a week ago, 2 weeks ago, this is the one thing I brought up because it just didn't look like to me that this thing was really getting going. And of course, this is probably the number one breadth operator in the market. You can look at the numbers, but this one at least gives you kind of a smooth version of it. But that's the NYSE. Let's do the NASDAQ too. Now, this one, the NASDAQ was a little better, but we'll look at that. And you got to see this how strong the market was back up here at the end of January. After the pullback and the push back higher, we just never really had any real wide participation in the market. And that's what you always have to worry about because a few stocks can push the entire market higher, but that doesn't mean that the tide rises all boats. It may a little, but not all a lot. So what do we have today going on that's different than all the other days? Well, we closed below the 9-day moving average or the 3x3, whichever one you want to use, on Microsoft yesterday by just a hair. And, of course, boom. Normally, that's what you get, you 1 day. Now, ideally, if you're looking for some kind of long-term top in the market, I'm going to go back to Joe DiNapoli's best topping pattern, and that is 10 to 20 days above, a couple days below, a couple days above, and then close next below. And you could pretty much say that that is what we're looking at. It's more, though, in kind of the range of error on the 9-day. I'd much rather, especially this being the leader of the market, have it go back once again, maybe up the first couple of days next week, get above that 9-day moving average, and then close below it. And then you could easily see a real fast trip down to 165. But at this point, all you have is 1 day out here back to the support level of the 4th of February. The other stock that's giving it up today on kind of the same thing is Apple. You had the close yesterday below. And then, of course, it opened lower and blown down to 310.87, which you kind of wonder when Apple won't buy its own shares. That's got to be a tell, right? We'll be back in a minute.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And as we look at Apple, what I'm really looking at is the day of the 31st when it came down with about 50 million shares. We're down with about 20 million shares so far. So could we get a test Monday, Tuesday, get everybody bearish and start moving higher? We could. It is Friday. We're going to have lighter volume. Let's say we come in with 25 or 28 million shares today on Apple. That would actually not be all that bad. Question is just how soon will the virus be over? It's not a question that anybody can really easily answer, but I'm going to say that if you read the newspapers in previous pandemics and epidemics, it seemed like when everybody finally woke up to the fact that there was a problem, generally the problem was over. So maybe this pullback right now is telling us that we're getting close to the fact that it's going to be priced in going forward. What else? Let's look at these earnings stocks over the last day. Take a look. Advanced 6, A6 is a symbol on it. Gap down a little bit. Does have some volume. 1570 is the next low on it. Barnes Group. I think this is the old Barnes & Noble part of it, if I'm not mistaken. Let's take a look. Just so I don't make a mistake, I will look up what it says about it. Come on. So slow. Oh, no, not. Glad I checked. Industrial and aerospace manufacturer, Barnes. United States internationally, precision components, products, and systems for applications serving various customers in end markets such as transportation, industrial equipment, personal care, all kinds of stuff. Did break through the previous high back on the 6th of February. You got some volume enough, but not holding the high. Of course, a pretty horrible day. So the question is it? Do you just say that actually it's doing fairly good in a bad market? Boyd Gaming could be a fairly nice reversal signal on this. Certainly some dark cloud cover. And again, this is all about the virus, because those anywhere there's going to be a group is going to be a problem. It could be worse, could be a lot darker than this, and the volume really not that exciting. Was higher, of course, and that is one thing to look at. Cinemark just blew out the lows out here today. And what'd you get? You got 3.5 million shares already. Went through the last low that had 2.9 million shares. So you're going to be able to get a lot on the downside. This is the motion picture exhibition business. And I should have thought about this a little bit longer. I talked to a couple of people about what made Netflix so good. And I said one of the big things is that they had nothing to do about distribution. And basically, a lot of the big movie stars right now are doing stuff that you wouldn't really think would do something on Netflix or Amazon Prime, is because the money that was going to these distribution companies is going to them as kind of executive producer or something else. So they're making a lot more money than they would if they stored and spent the same time making another movie. So they're actually pretty happy. My guess, though, is that money goes away, and the idea of the one big movie star may be going away. But certainly, distribution is one of the worst businesses in the world for ethics. These guys have been the worst of all time, right up there with record producers, for lying and cheating anybody they can at will. Kind of the mob part of these businesses. But they got 6,000 screens that they represent, as well as screens in Brazil and Argentina and Latin America, too. But you know what? I would not want to be in their shoes these days. Dolby Laboratories, nice bounce on this today. Oh, excuse me. Why do I keep on saying this? I said that yesterday. I think because I see that DBX, and everywhere in the audio business I worked in for 20 years, that meant Dolby. But anyway, DBX Dropbox, a nice pop. A lot of short sellers in this, expecting it to go lower. I didn't think that there was much in the way to move it higher. Again, I haven't spent a lot of time over the weekend looking at these. But you did break through the previous September 20th high that had 6 million, alone 6.2 million shares. You already got 37 million shares. I just don't see any long-term change in what this company can do. Anybody can do it, and guess what? No one else really needs to buy them. Diana Shipping. Yeah, we've talked about this for a while, that Baltic Dry Index has been low for a while. In fact, I haven't looked at it. Maybe I should do that right now. Come on, where are you at? There you are. Baltic Dry Index. There it is. Okay, you're at 480, which I think that tells you about everything if you've watched the charts for these things for any length of time. Does this thing have a chart? Let's see if I can go back here. Let's just actually say chart. Okay. There it is. Investing.com's got one. Okay. Well, you had some pops. Is that wrong? 110. Huh. It is wrong. See if there's another one. These are historical. Well, no one's got it. I'll go on to something else. Anyway, Diana Shipping actually on fairly light volume in the previous low of February 3rd. And again, when these rates, Baltic Dry Index, if you're looking for that whole metals and mining part of the market to start picking up, I would suggest the thing to do is watch that Baltic Dry Index and see when it starts ticking up. That probably is a good indication that people are buying more metal, copper, all the other stuff, iron. But so far, nothing, nada. Talk about a big pop and drop. It is in eHealth today, was way up about $18, $19 earlier in the day. It's come back just barely over where it was, and actually got back into yesterday's price point earlier in the day. Of course, we want to look and see how this closes, but 19 million shares, so you had some good volume. Support comes in back at 120. My guess is this will come back into that 120. If that does not hold very well, then 100 is a good chance of getting retested. That may be better for the long-term pattern, too.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we had a question in here from Hector asking, InBev, is it a short squeeze or a chokehold squeeze? I don't know who's shorting $2 stocks. They should stop it. It's just insane. But you know what? People do it. how's this going to play out in the next few weeks? I don't know. Again, I know that this is like moths to the light for weed stocks. And, of course, these things tend to move real well, and you get into them. But for me, it's always been the path to losing lots of money. I think it's SMG. As I've said before, and we talked about earlier this week, the stocks that you want to be in almost always, historically, are stocks that are tangential to the business. When you look at how Scott's Miracle-Gro is held up, they sell apparently a lot of fertilizer, I hear, for growing weed. And maybe they got a specialized version of it or something. I don't know. I don't pay that much attention to it. But, we were talking about, maybe on Tuesday about the AC-DC converters for solar cells. And then we look at First Solar today. That is generally the history. I guess it was First Solar yesterday and today. That is the history of these companies. Generally, the people that are in the primary business, eventually, they become a Boeing and a huge company. But generally, in the early days, a lot of them bite the big one. And I just would rather be in something like that. I've said for 2 years that if you wanted to be in one and not lose your shirt, you are probably better off with Scott's Miracle-Gro. Even on a horrible day today, it's down on light volume, and it's still above the 9-day moving average. It hasn't broken anything. So I'm going to say the same thing. I don't know how much there's left in it, but for all the money that you could have made in it a long time ago, I think back when this was 50 and everybody was talking about those. I'm just not going to be in it. I don't understand the business. I don't understand taking drugs. I have an incredibly negative bias to it from my family growing up and what it cost. So you're not going to talk me into smoking dope. You're not going to talk me into probably taking much of any medication. I mean, it's a big event when I take an aspirin. So, for me, you got to know your biases, right? And my bias is that I literally hate all this stuff because of the damage I've seen in the past from drugs. So whether or not people say it doesn't have any effect at all, I'm not going to get by it. It's like tattoos. That's my other one. My grandmother used to have all the National Geographics, and everybody she showed me was somewhere in the southern Sahara, and they had tattoos all over the place. I'm always going to think that people that are living in dirt or probably have tattoos. I'm never going to be able to get one. This makes my skin crawl thinking about it. So whatever you've got in the way of biases, and I'll say honestly, it is a bias. Doesn't mean that you're wrong, but does mean that you're not looking at it objectively, and I can't. But again, whether or not it's the companies we talked about from AC/DC converters or others, almost always the people that made the big money weren't the gold companies digging out mines. It was the people that made the picks and shovels, and it was the people that made Levi jeans. They're still around. You don't hear much about all the people that had a big gold mine back in 1870. You do hear about Levi jeans, and my guess is that as this becomes more and more of a business, Scott's will probably do just as well or better than any of the others. I'll go to nature. Oh, I'm not that silly. I just, for drugs, and yes, I know alcohol's a drug, so don't get me there. I will plead hypocrisy on that one too. It's just I drink so little that it probably does not matter. Okay, what else do we have? Anyway, we looked at First Solar, FSLY. Come on. There we go. What do we have here? HMSY. Down here testing the lows, you had a 3.5 million share low back on November 1st at $24.43. 3.5 million shares, 1.7 million shares today spiked it back into this gap right here. Looks like you've got fairly decent support at that level. I need a session. ITT. Got a nice bounce out here. Not much in the way of volume today, though. Certainly on that. Gave back about a third of it so far. Don't think you can make anything about that. MGA, Magna. I wonder if they have Magna hats. You would think that they did. Pop up to $53.61. Huge reversal, huge dark cloud cover, huge volume, not all that exciting, but did get to 53.61. Looks like that would mean that you're going to retest the $50.40 low coming out here. OLED, which is a company that really is in the organic light emitting diode business. They make a lot of royalties to Apple for their OLED screens and others, although a lot of people have pretty much gotten out of the idea of building OLEDs, other than Apple, I think. There are still people doing it, but it's a little bit more saturated, but got more problems. Apple probably eventually get out of it too. You spiked down with some decent volume back to the October 3rd low that had 760,000 shares with 2.2 million shares today. And that's probably a little bit of a discussion about Apple and production over in China with the corona with the Lyme disease. Chris, just say it ain't so, Joe. Just say it's not so, because look at that. How could anybody that could make such a beautiful steak have a candle like that? But they certainly did. Open a little higher, 24.42. Claimed the last 2.5 candles on the run back up into earnings today. It's back at the 9-day moving average, though. So you still might have something, but retail stocks still very tough. Feeling oily. Is XOM a buy yet? Like I said at the beginning of the show, you're starting to see at least a little bit in that rig count of people giving up for low prices, and I don't think you've got enough of it. You got a strong dollar. You got way too many probably oil rigs to support a price in excess of $55. Or maybe $60. So still problematic. I see nothing in the chart. You got a little lighter volume. You probably want some consolidation down here, and you want to see that rig count really diminish over the next few weeks. That would be the biggest difference. These companies, too much rigging going on out there. We'll be back in a minute.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you'd like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Got a question to take a look at United States Steel and why there's no good news today. It would need to consolidate out. There may be good news for this whole sector, and that is as a lot of places have closed production in China, they've gone to dumping steel again on the market. And, of course, they're not really producing new steel. They're just dumping a lot of it that was sitting around while other production facilities have been shuttered. So you may have a really good snapback as soon as these folks get back into production, and you need a lot of steel. I just don't see any indication of that. But if you start seeing the word get much better in China, there may not be enough steel for everybody to get going again. You know, you're sitting on big piles of it. You want to at least have some money coming in, and apparently the Chinese are dumping their steel to get cash. So a lot of those bigger companies to keep things rolling, while a lot of things have shut down over there. I think that province of China actually has a lot of steel production too, but that's it. Should we have a dinner's movie night? Cheech and Chong, get a lift. Hell yeah, Dave's not here. Okay. Anyway, I think you're going to get a huge snap on this. The question is, when does that coronavirus news stream actually change? And that is a hard question to answer. Texas Roadhouse, just the opposite of Ruth Chris. These guys have wonderful steaks and a nice pop in their earnings. 2.2 million shares so far today. So some decent volume out here. Let's go back. I probably wouldn't be buying it. But looks like you're going to go up and test the $73.09 high from September 7th of 2018. So this has done a lot of good work since its low back October of 2018. This thing has really turned around, and you got volume and a nice gap higher. So I don't know what else you can ask for than that. WKP carry up a little bit. And of course, Zscaler, one of those stocks on the loser horn today. Do I still have it, or did I closed it? Okay, down on volume. The next low out here is $40.05. And that's it in the stuff I was looking at there. Let's go to the other list. Like I said, we got a lot of stocks to look at while we're waiting for a market to give us a clue. Exxon Enterprises. This did gap down yesterday. Not a whole lot follow through today. Very light volume. ACHC, Arcadia Health, basically pumping against the July 1st of 2019 high at 35.40. You got to 35.30 yesterday. You're just underneath that today. Volume was a little light yesterday. What is it today? 311. The whole thing was kind of light coming back up, but it doesn't look that horrible. AECOM, ACM is the symbol on this one, trying to bust through with a huge candle 2 days ago. Kind of just running out of steam, though, today. Adobe, first tick underneath, really underneath your 9-day, going back to the 27th of January, 27th of January. It did that one day and popped right back into the trend. That is, the question is, Monday, do we see these things once again just pop above the trend, or do they just go sideways for a little while, pop a little higher, and then give up? That would be the pattern that I'd be looking for if we're really going to see some destruction in these markets. Agree Realty, ADC, testing its previous high, actually with a little bit more volume, but not holding the high. AGIO, which is Geos Pharmaceuticals, this one's testing its previous high at about half the volume as of yesterday. Today, very light volume. But no clear signal on that. AIG, American International Group. Of course, this fell apart and turned tail and ran and skedaddled down to $47.84. It had a little pop out here, but not much in the way of anything new. AIV, which is Apartment Investment and Management Company, a nice pop up on light volume. November 20th, you had 1.5 million shares at 55.12. You got to 55.68 today, and you have, a fifth of that volume. This wasn't as bad on the ride up, though. This looks more interesting. Ardlex, ARDX is a symbol on this one. Just coming back up to the monster gap down that it had years ago, back in 2017. I don't think it's ever going to get or go forward on that one. AVYA, which is Avaya, used to be another company name, I forget. The Chinese Inc. or something like that. Back up against its previous highs of August 29th of last year that had 4.4 million shares into it with 2.9 yesterday. And you got about 1.4 today. BGS, which is BG Foods, out here breaking the lows of November 1st, 2019, had 3 million shares. That was 1383, got to 1344, but only half the volume. Maybe food companies are the safe play going forward. Bluebird Bio. Yeah, Bluebird Bio. I want to say Bayou. Blue Bayou. Wasn't she one of the most prettiest girls in the world? Circa, 1973? Just a thought. Linda Ronstadt, yeah. Okay. Well, you came back down huge volume. You're just going sideways out here. This is not showing much. I don't see much in that one already. Let's go back here. Cleveland Biolabs, this is actually not a bad-looking pattern. It took off with huge volume back on the 27th of January with 14 million shares. It's pulled back on very light volume. Ideally, $1.50 on that one on light volume. Find out what's going on with it, but that is interesting. Celsius, CELH, nice spike higher today. Gave most of it back, though, already. CHMA, which is Chiasma, just kind of bouncing along. Chewy's, of course, the IPO from last year on pet food. Huge gap higher to this morning, but gave more than half of it back today, and it is back into the trading range. Sienna, not quite dark cloud cover. Ideally, I wouldn't be short this, but ideally, if it could come back to $38, that may make a really nice bullish pattern one day. Costco kind of just messing around on no volume today as it pulls back. CRTO, trying to make some lows out here on light volume. Almost 3 million shares back on January 15th at 1366. You're down to 1296. And what do you got? 500,000 shares today. We'll be back in a minute.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we're getting ready to finish the weekend today, we're off 37 on the S&P cash, 33.35. 247 lower on the Dow. Nasdaq's off 183. Russell's off 18. Crude is down 33. And we'll look at a few more of these as we have time. What else do we have here? CSX. This one is one of the more interesting ones to me. And that is possibly a triple top. 79.91, May 3rd, 2019. 97.67, July 16th, 2019. And, of course, we got to $80.62 yesterday, but with just 2.75 million shares. So, again, pretty stretched up at the top. But, like I said, some of these look kind of interesting. Like I said, this sector that I've been kind of watching has been, of course, the more miners in here. You've got like Freeport, McMoran, some of these. I'd love for them to come back down and either test this gap at, on this case, $11.50, or maybe even come back down and test the low at $10.83 with a lighter volume. It's been that way so far, and that may be a nice consolidation. But if there's a sector that looks like it's kind of wiped out right at the moment, it certainly looks like the miners, not the gold miners, of course, but the rest of the miners and a lot of this other industrial stuff. And, of course, the best cure for a low price is a low price. But a lot of these look like they could come back down and make a very sweet, tender low out here. And if I could get that under $11 on light volume, that probably looks fairly good. And eventually, like I said, you get those snapbacks after everybody sells commodities. And this may be one, but you need a little bit more pullback, a little more patience. Sell when you can, not when you have to. And we will see you Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service